Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the weekly data cycle review for Monday the 8th to Friday the 12th of the 3rd, 2021. Basically, it's our version of the economic calendar in modelled terms. Right, what we've done, we'll start off with China and the dollar. We've got January data for the whole of January, February, first week of March, second week of March, which is the week we've just had, the 8th to the 12th. And we've got T1, T2 standing for Tier 1 and Tier 2 data. So let's make a start then. China, Tier 1 January, -5, February -5, first week of March 0, and 8th to 12th +2. So we've had weak Tier 1 data, which is now improving, and Tier 2 +10, -4, -3, +8. So you can see that the Tier 2 data has significantly improved this week as well. Now this ties in with our general approach to the trading. We're going to start this and analyze it later, but initially that's the China data cycle is on the up basically. Right, the USD then, the dollar, Tier 1 -5, +1, +2, +2. So we've got remember it restarts, so these are discrete variables, so January is discrete, February is discrete, and these are cumulative in intra-week variables. So +2 then for the first week of March, and +2 for the where we are now of the second week of March. So that means that the data has steadied and is not moved really. And then Tier 2 then we've got +24, +36, so very strong, and then we've got +8, +9, so positive but just tailing off a little bit in terms of acceleration. So that's the dollar data and the China data. Don't go away, we'll start now. Right, welcome back. We've now got the German data and the EUR bloc as a whole, the 27 nations. Right, Germany then, Tier 1 +4, +7, -3, -3. So we've got a strong Jan-Feb, and we've got a deterioration in the cycle for Tier 1 in the first 2 weeks of March. Tier 2 then +7, +11, similar type of situation, -2, -3, slight improvement on the Tier 2, not much to write home about. Euro as a block then, Tier 1 -6, +13, so strong February, -4, -5, deterioration again. Tier 2 +5, +6, +2, +5. So the Tier 2 data is hanging in there in the Euro block. The Tier 1 data isn't, and German data is showing signs of deterioration at the moment. So we'll stop it there and move on to the next two. Right, welcome back. We've got the yen, JPY, and the pound, GBP now. So the yen then, Tier 1, pretty neutral, totally neutral, January to the first week of March, and now we've got slight deterioration in this week, 8th to 12th. Tier 2 then, very strong January for Tier 2, +17, reasonable February, +5, and a slightly deteriorating but positive situation in the yen for March. The pound then, Tier 1 +3, +8, so we've got an improvement in the data there. It's neutral for March so far, +5, +11, improvement again, and then we've got +2 and a slight deterioration in Tier 2. So as I say, we'll wrap this up at the end, but so we'll stop this now and move on to the next two. Right, here we go again. We've got the CAD, a Canadian dollar, the AUD, the Australian dollar. Start with the CAD then, Tier 1 +8, -4, +2, +6. So initial deterioration in February, but now improving tier 1 March. Tier 2 then -1, +7, +7, +4. So we've got positive but slightly deteriorating tier 2 data in the March situation. Right, AUD then, tier 1 +2, +2, +3, +3. So tier 1 is positive, but not setting the world alight, and technically stable here at +3. Tier 2 +6, +8. Deterioration in data in the first week of March, and now it's improving for tier 2 in the last week, 8th to the 12th. Right, last two coming up. Right, last two then, NZD, New Zealand dollar, CHF, Swiss franc. NZD then, tier 1 +2, +200. So basically tier 1 mildly positive and neutral. Tier 2 -2, -7, deterioration January to Feb, 0, 0, +2. So slight improvement on the tier 2. New Zealand, nothing to write home about. Right, CHF, Swiss franc, tier 1 0, +200, slightly positive to neutral. Tier 2 -2, +11, a strong tier 2 in February, and now we've got basically marginally weak data into March, -1, -1. Stop it there, rub it off, and then we'll do the analysis. Don't go away. Right, let's start the analysis then. So just to summarize then, we've got a significantly improving China data cycle in March. We've had a strong dollar cycle, which is now looking to start looking fairly mature, so it's starting to be marginally positive and starting to roll over. Germany is starting to look a little bit weak and dodgy around the top on tier 1 and tier 2, and the Eurozone is hanging in there on tier 2. It's got positive tier 2 data, but it's quite weak on the tier 1. So China strong, dollar thinking about peaking and rolling over. Germany certainly weakening, and the Eurozone mixed, but the tone is fairly soft. Right, what have we got then? Yen. Remember the yen is closely linked with the equity transmission. But what have we got? We got basically a neutral tier 1 to slightly deterioration at -2, and tier 2 we had a very strong January at +17, reasonable Feb +5. And it's hanging in there now on the positive at +2 for March. So that's the yen really. The pound had an improving data cycle January and February. It's now sort of neutral to marginally rolling over. Tier 2 is -2. Right, CAD then. CAD often linked to oil. Oil has been on a tear. Basically the CAD has seen tier 1 significant tier 1 improvement. It's now operating at +6, which is pretty good for the CAD recently, and tier 2 has just come off a little bit, but it's still positive at +4. So the CAD is on balance strong very strong in the tier 1, and slightly coming off a bit in tier 2. Australian dollar then, what have we had here? The Australian dollar is basically showing signs of improvement. It's not setting the world alight, but it's incrementally improving tier 1 and tier 2. So we're at +3, +3. So not bad. New Zealand dollar then. Basically the New Zealand dollar is quite neutral to soft. Tier 1 is 0. Tier 2, whilst it's at +2, February was -7. So it's starting to look quite mature, the New Zealand dollar data cycle. And the Swiss franc, tier 1 pretty neutral, 0, and tier 2 starting to come off -1, so marginally weaker, and the Swiss franc is well, we'll talk about that in a minute. Right, so what have we had this week then? We've had in terms of, remember you can link this with the earlier sister video of the flows, the weekly review of the flows for the same period, Monday the 8th to Friday the 12th. If you remember, data-wise, in terms of highlights, we've had Sunday we had China's trade balance, which was pretty good. Imports and exports rising, but overall an increase in trade balance, which means exports are exceeding imports. So looking good for China. Monday, weak JPY GDP. But let's say the JPY is pretty much held hostage via the equity transmission. Tuesday, neutral Euro GDP, so that didn't shake it up much. Wednesday, positive China CPI, feeding into this idea of improving Chinese data cycle. Dollar had soft CPI on Wednesday, and we had the CAD rates decision. Thursday, Euro rates decision, and Friday we had neutral German CPI. That didn't really help the German data cycle. Positive CAD employment data, so that ties in, and a positive Michigan consumer sentiment. Right, and bear in mind that the US has got massive fiscal stimulus program going on, and they've just passed the latest one, the 1.9 trillion. Right, so where are we then? If you look at the complex positioning for pretty much now, really, we've got the Swiss franc is the strongest at 70% above the model floor. The New Zealand dollar is the next strongest at 67%. The dollar is at 58%, and the yen is at 53%. And then we've got the AUD is 48%. The euro is 41%. The CAD is 37%, and the pound is 26%. Now these are the full complexes positions in terms of each other. So they each contain the 7 FX pairs of the other 8 complexes, if you know what I mean. So basically, the Swiss franc is the strongest complex of all at 70% from the floor, and the pound is the weakest of all at 26%. And this is our long-term complex positioning. It doesn't mean that that's what's been happening in the short term. This is where they are long term. So our trades then, so as I say, at the moment we're plus approximately 1150 points or pips, and we're long AUD dollar, we're short the NZD against the euro, the pound, the CAD and the AUD. Now, does this make sense? Well, we believe so, because the NZD is pretty cooked at 67% in terms of long-term complex. So we're shorting the NZD, so it's got elbow room to come down, and we're shorting it against. In other words, we're going long these 4 here, which have got the elbow room to go the other way, and we're also long AUD dollar, so we're expecting the dollar to come up again, the AUD to come up and the dollar to come down. So all that ties in with our modelling, and it also ties in with the overall our view of the economic macro cycle at the moment, where you've got massive American stimulus. You've got rising American 10-year yields, which is indicative of basically an improving situation going forward. Remember, these are 10-year and they're not short-term bonds. So that you'd expect in a growth phase for 10-year yields to start rising, which they are doing. We've got massive fiscal stimulus in the form of the relief bill in the States, not to mention globally. So you've got, you know, in terms of the macro model, you've got a rising G, which via the multiplier. I mean, this is a Keynesian injection, if you like, and via the multiplier, it should lead to a multiplication of GDP in various rounds of expenditure. Now, so you've got that situation. You've got this idea of an improving China data cycle, and you've also normally there's a strong link between China's fortunes and the AUD as a commodity currency. So that's why we're long AUD. The dollar, arguably, you've got rising yields, but we would expect that. You've got further evidence in the Wall Street. The Dow Jones is outstripping the other two, with the S&P next. Dow Jones is basically the industrial index, which is again looking at core industrial growth. The tech is underperforming. Arguably, there's two reasons for that. The first reason being that the people are spooked about the rising yields, but that's a secondary reason. The main underlying reason that the tech is underperforming is that it got ahead of the other two. It was ramped, if you remember, at the end of last year. The tech was outperforming the lot of them. So the tech arguably is just taking a breather and coming back, and ultimately the tech, the S&P and the Wall Street will all be moving up going forward. The second quarter is likely to be very strong in terms of global growth, assuming that we're coming out of this pandemic situation with all the stimulus, China's 100-year celebration, etc., of their People's Republic of China regime. It's all looking good in terms of we're likely to see a massive boom growth period in risk assets, and we're positioned in long AUD, short NZD. And you could argue, why you short the NZD, because the NZD normally moves in tandem with the AUD, and we're short the NZD on particular currencies, the euro, the pound, the CAD and the AUD, because of its the NZD got ahead of itself. It was punching way above its weight, and so in relative terms it will be outstripped by these other complexes: the pound, the euro, the AUD, and the CAD. So that is why we're positioned in that position. We're as I say, we're about 1100 and change points up at the moment. We're expecting a significant situation in these trades. It may well, it's obviously going to ebb and flow, but we're looking at, at the moment our projections are about between 5,000 and 7,000 points profit before we hook them out. So I hope that was useful. Try and catch the sister video, which is the flows, which links in with this, and if not, I'll see you on Monday morning for the daily market briefing. Thank you very much.